Let's connect with Prakash Diwan, Chief Portfolio Strategist with Prakash Diwan Wealth Circle. Prakash, good morning. Thank you for joining us. Prakash, the year 2013 has been off to a good start. So after the recent run-up, how would you map the risk-reward ratio?
Usually these companies that have started off are the better ones, and very clearly, as anticipated, numbers have been fairly encouraging. But I don't think this would set the trend for at least for the banking pack. There's a huge list of companies which are likely to come up with earnings, and it could be a mixed bag. So from a risk-reward ratio, it's going to be a very clear bottom-up selection of stocks. I don't think the markets are going to be giving you a very wide-ranging, benefit from here. And, there's a sector rotation that's very clearly, evidently happening, and you would need to participate in that. I mean, I think sectors like fertilizer, chemicals, which have not participated, would offer much more promise. Telecom, we've already seen that happen. So, those kind of things is what you need to look at, but it's still a very stock-specific market. Still enough opportunities as well.
Prakash, what would explain the spurt that we saw in Bharti and as such the entire telecom space, irrespective of the management jugglery at Bharti?
No, absolutely. It's quite puzzling, Aisha. I mean, a change in management was seen as better for Bharti, but I don't know why the other players also rallied so much. But essentially what seems like happening is the number of dual SIM connections that the industry was used to has come down dramatically in anticipation of some sort of a tariff hike or some sort of a change in dealer mindsets, and that has resulted into a likely increase in ARPUs. So if that ARPUs were to go up, if the traffic was to go up, these companies could start getting into a scale which is much more efficient and profitable, and that would mean the numbers would start improving here on. So it's like a bottoming up of the earnings part in this industry, and things could start looking up from an operational efficiency perspective, and that's what people are kind of building on.
Prakash, after Wockhardt and United Spirits, many market men are of the view that RCom could be another special situation stock. Do you buy that argument?
Possibly. I mean, it does have the potence of, special situation stock. And in this year, you would have to look at these kind of opportunities, essentially because, look at its valuation, look at the kind of, huge change that it can bring about in itself by, just those things that we are talking about, we are hearing about, happening in terms of the debt restructuring. So broken balance sheets are the best special situation portents, and this definitely qualifies for that. And even from an operational efficiency perspective, RCom has definitely improved, I believe, in the third quarter, given the kind of channel checks that we've done. And we believe the numbers would start reflecting that as well.
Prakash, at the time when global growth is still looking anemic, risk is still occupying center stage. Do you think it's a matter of time classic defensives will make a comeback?
I feel because these stocks would not go out of most portfolios in a significant way. I mean, you could probably see some profit booking, definitely, but consumer staples, and particularly in our context, the larger pharma companies, FMCG stocks definitely will be hoarded by particularly the institutional side. I don't think anybody is in a hurry to get out of these. So, and the kind of complacency that we currently see on the global markets with risk on happening, is definitely a very dicey kind of a situation to be into. In fact, liquidity could change its direction any time, and that is the time when there'll be a scramble for these stocks. So it's better to have these stocks, and if people are invested, they should stay put. I don't think they should be in a hurry to move out. In fact, buying on dips is a good strategy for some of these large cap FMCG pharma names, and that should continue going forward as well.
Prakash, at the current juncture, where are you putting your money to work?
Because it's still, as I said earlier, bottom-up stories, mid-cap stories that we believe have a longer-term potential, or potentially turnaround stories that are in the making, given the interest rate turnaround in the interest rate cycle. A classic example is Ashok Leyland on the auto side. We got out of things like Bajaj Auto, Hero MotoCorp, even M&M for that matter. And some of these stories which we've forgotten in the past, like Alok Textile, they've done enough work to restructure the balance sheet, put off the debt, sell off the retail business. So you would start seeing some sort of results from these attempts, and those are the ones that need to be chased, not the momentum plays, because it could turn around. It could actually reverse any moment, and you would be caught napping on those.
Are you buying Alok Industries? Is that what you're saying? I mean, they've hardly made anything substantial in terms of profits in last 2 or 3 years.
No, absolutely. What's happening is they have started getting the debt burden off their balance sheets, and they've sold out a lot of the real estate, particularly in Bombay, in the peninsula, in your neighborhood itself. The realization of all those would be expected to change things for them. They've also put the retail business, the H&A business, up for sale, even the global retail business that they'd acquired some time back. And essentially, their expansion of margins is likely to start off maybe in, the last quarter of FY13. So, these are long-term stories that are in the making. At 12 rupees, there's not much to lose. The downside is limited. And you would have to kind of wait for the effect of all these attempts, all these efforts to start showing. What's happened to Suzlon, classic example. Things took time, but that's where, the turnaround starts happening and people would want to kind of look at some sort of green shoots emerging on these turnarounds.
Prakash, Bank of America Merrill Lynch has released a report and they are maintaining a view that in the first half of 2013, rather than high quality stocks, low quality stocks will make money. Looks like brokerages are also of the view that it's time to chase beta.
No, absolutely. That's what I meant. And you very clearly, your question on, your surprising question on Alok was manifestation of the same, situation that these are things that we've forgotten. And high beta is something that essentially would pay off, given the fact that we're already at elevated levels in most of the, the regular, high quality stocks. Look at the Nifty stocks. I really don't think there's much that you can make except for maybe, a KN giving you some sort of an upside or some situational stock or some regulatory driven change in ONGC or something. But you would have to chase these mid-cap stories somewhere on the BSE 200, on the latter part of the BSE 200, where these situational, solutions could be starting to show. High beta is going to, start dominating because there's a lot of changes that could happen, especially with the reforms from the government side getting a push as well.
Prakash, what's the expectation from Bajaj Auto today?
I guess, they would continue showing some sort of improvement in efficiencies, margins as well. But, it's not something that the growth rate at which you would we've seen them all this while would probably start tapering off. And it's time to kind of book profits out of such a great story.
Prakash, 2013, what do you think is in store for names like TTK Prestige, Jubilant Foodworks, VIP Industries, from this year?
Nikhil, as you very rightly say, what could possibly happen is we could see some, profit being taken off the table from these, expanded PE players. You already have this happening on Bata, Page Industries, TTK Prestige, Jubilant, and investors would find either an alternative set of such high consumption stories, high growth consumption stories. Some of them in the making are the McDonald's franchise. Nobody's yet kind of built on that. You could probably look at getting into those. Or you could look at specialty restaurants. So some new names will emerge in that space, while obviously the cyclicals will also start getting some sort of an interest. But cyclicals are yet to kind of, see that robust money flow. But I believe at least people are, cashing out of these high growth consumption stories, erstwhile consumption stories, which have reached PE multiples, which seems slightly difficult to justify given the subdued kind of environment around us.
Prakash, what's in store for Reliance Industries? Because depending on whom you're asking, you will get a different answer. The bulls are making a case that for Reliance Industries, news flow will only improve. The bears are making a case that Reliance Industries, well, the E&P problems, they still, persist, and they will persist going forward as well.
Yeah, absolutely. I mean, Reliance Industries, as I said earlier, is very much part of the Nifty stocks, which are not going to give you great alpha. Very clearly, it could probably just be a market performer going forward. And this anticipation of, the buyback coming to an end, that 1 year period window, was where, you saw some sort of technical robustness happening in the first week of Jan. But other than that, good GRMs is what we are all expecting, and that's probably priced into the this market already. And going forward, it's only that 2014 deadline for the gas repricing that could make a huge difference, which could be a game changer. Otherwise, I don't think Reliance could do much in terms of outperforming the market with a fair margin. You would have to look at high beta, and this is not high beta at all at this stage.